investors! Welcome back! Today we're analyzing Airbus, one of the most important companies in global aviation. Commercial planes, military jets, helicopters. If it flies, there's a good chance Airbus built it. Airbus designs, manufactures, and delivers aircraft all over the world, from the A320, the plane you've probably flown on, to the A350, helicopters, and even satellites. The company operates across more than 180 locations, serving airlines, governments, and private operators. Their biggest strength, a gigantic multi-year backlog that gives them visibility for years. Airbus has three major segments: commercial aviation, the real revenue engine, defense and space, military jets, satellites, secure systems, and helicopters used by both civilians and military. It's a diversified model, but commercial aircraft is clearly the crown jewel. Airbus sells everywhere: Europe, Asia, the Middle East, and the Americas. Aviation is global, and a worldwide customer base protects Airbus from regional slowdowns. This global footprint adds resilience that investors love. Here's the stock price over time. After the shocks of recent years, Airbus has recovered strongly, thanks to record aircraft demand and improving supply chains. It's not a hyper-growth stock, but it's one of the most stable names in the aerospace industry. Revenue is rising steadily as Airbus boosts production of the A320 and A350 families. Airlines need to modernize fleets. Traffic is recovering, and Airbus simply can't deliver planes fast enough to meet demand. Net income has improved as supply chain pressures ease and deliveries increase. Airbus is returning to strong profitability, and that's a core part of the long-term thesis. Free cash flow is one of Airbus' strongest advantages. Big orders, long-term contracts, and high-value aircraft create massive cash inflows essential for R&D and future aircraft programs. Operating margins are recovering nicely as production stabilizes. Commercial aircraft remains a high-margin business once the supply chain is under control, and Airbus is showing that recovery clearly. Earnings per share are rising again as profitability improves. Not explosive growth, but consistent and reliable, exactly what you want from a major aerospace manufacturer. Valuation is reasonable compared to other industrial leaders. Investors are paying for long-term visibility backed by decades of structural demand for new planes. Airbus pays a dividend, and it has been increasing as financial performance. It's not a dividend aristocrat, but it's a healthy bonus for long-term shareholders. Long-term debt is well managed and supported by strong cash flow. Airbus has the liquidity and balance sheet strength to navigate economic cycles and invest in next-gen aircraft. Most analysts rate Airbus as a buy, thanks to its massive backlog, strong demand for new aircraft, and solid financial recovery. Confidence is high, and the long-term thesis remains intact. Airbus strengths are clear: a global leader in commercial aviation, a huge backlog providing visibility for years, and strong free cash flow with a rock-solid balance sheet. It's one of the most resilient industrial players worldwide. But there are weaknesses. Airbus depends heavily on airline demand and global travel cycles. The defense and space division is less profitable, and supply chain issues can slow production. These risks don't kill the thesis, but they can create volatility. I am a shareholder of Airbus. For me, Airbus is a long-term structural play. It's not a tech rocket, but a global industrial titan with unmatched visibility. Airlines need planes, and only two companies on Earth can build them at scale: Airbus and Boeing. That duopoly is one of the strongest competitive moats in the world. This is not financial advice. Always do your own research before investing. Thanks for watching. Like, share, and subscribe for more weekly stock analyses. And tell me which company I should analyze next.